Soldiers, stop scrolling. This is an emergency briefing. Bitcoin is trading at $87,000, just inches away from making history. But look at the market sentiment. It is screaming fear. This is the biggest anomaly I have ever seen in my career. Why are people terrified at the top? Is this a trap? Or is it the calm before the storm? Today, I am going to show you the 6 shocking charts, from the rainbow curve to the casino's max pain data, that prove why this fear is a lie. We are going to expose why the real pump hasn't even started yet. Only Bitcoin, only the data. Let's dive in. Before we start, remember, I am a strategist, not a financial advisor. Everything you saw today is for educational and entertainment purposes only. The market is risky. Always do your own research. First, let's address the psychology. Look at this dashboard. Bitcoin is trading at $87,500, just inches away from all-time highs. But look at the sentiment gauge. It reads 33. That is fear. This is a historic anomaly. Usually, at $87,000, the crowd is euphoric. Today, they are terrified. In the war room, we know the rule. Tops are formed in euphoria, not in fear. If the crowd is scared at the highs, the rally is just getting started. Let's look under the hood. This is the 4-hour data dashboard, and it reveals the hidden war. Look at the second panel, the CVD, cumulative volume delta. You see this red line crashing down? That represents aggressive market sells. Retail traders are panic selling their coins, but look at the price action above it. Is the price crashing? No, it is moving sideways at $87,600. This is called absorption. When aggressive sellers dump but the price doesn't drop, it means a whale is sitting there with a massive limit buy bucket catching every single drop. Retail sells to whales catch. Now look at the funding rates in the middle panel. If this were a market top, these bars would be exploding high, showing that everyone is irrationally long. But look at the value, 0.0056%. This is completely neutral. The market is not overheated. There is no excessive leverage to flush out. This tells me the market is healthy, calm, and ready for the next move. And finally, look at open interest, OI. It is sitting at 103,000 BTC and slowly grinding up. New money is entering the market, but cautiously. This is not a euphoria blow off top. This is a market that is reloading its fuel tank for the next leg up to $90,000 and beyond. The conclusion of the data. Sellers are exhausted, whales are absorbing, the leverage is healthy, the engine is green. So, is Bitcoin expensive? Let's ask the algorithm that has tracked every cycle for a decade, the rainbow chart. The dark red band is bubble territory. We are not even close to it. We are currently trading in the light green band, which literally signals accumulate. According to the math of the logarithmic growth curve, $87,000 is still considered cheap. We haven't even entered the yellow FOMO zone yet. The real parabolic run is still ahead of us. Now, let's look at the casino logic. The house always wins, right? This red line is the max pain level, the price where market makers make the most money. It is skyrocketing towards $95,000. But the price, these green bars, is stuck down here at $87,000. There is a massive gap. Currently, the market makers are losing money on the downside. Physics dictates that the price must be magnetically pulled up to meet that red line. The math says the dump is over. You are selling because you are scared. But who is buying? Look at the heat map. See these bright clusters right below the price action. These are massive institutional buy walls sitting between $86,000 and $87,000. While retail traders are panic selling, whales have placed a safety net right under your feet. They are absorbing every single coin. This is not a crash. This is a transfer of wealth. And who is leading the charge? The biggest whale of them all. This chart shows MicroStrategy's average cost. Even as the price fluctuates, look at the green line. The total Bitcoin supply held by them. It only goes up. They are relentlessly buying at these levels. If the smartest institutional money is accumulating at $87,000, why are you betting against them? Soldiers, let's consolidate the intelligence. The narrative of the crash is a lie. The data proves it. Let's review the facts one last time. Psychology. The crowd is in fear at $87,000. Tops are never formed in fear, they are formed in greed. Valuation, the rainbow chart proves we are still in the accumulate band. We haven't even touched the bubble zone. The casino, max pain, is significantly higher at $95,000. The house needs the price to go UP to win. The mechanics, retail is panic selling, red CVD, but whales are absorbing every coin via limit orders. The verdict, this is a perfect storm for a vertical move. The springs are compressed, the weak hands are out, the whales are full. The evidence is on the table. MicroStrategy is not selling. BlackRock is not selling. The whales are not selling. So ask yourself, why are you selling? Do not let them shake you out inches from the finish line. This volatility is the price of admission for the gains that are coming. Trust the math. Trust the data. Ignore the noise. Disclaimer: as always, this briefing is for educational purposes only. I am a strategist, not a financial advisor. The market is a battlefield. Manage your risk, stand your ground. War room dismissed.